With the crypto market waiting for the next run up, will history repeat itself? The cryptocurrency market is widely known to be incredibly volatile and characterized by dramatic blow-off peaks where crypto assets achieve stratospheric prices, followed by a sustained period of decline where drawdowns of over 80% is not out of the norm. This extraordinary price action has made the cryptocurrency market one of the most lucrative sectors to speculate in, both for bulls and bears, since it is possible to obtain impressive returns if the right strategies are applied. And as you might expect, the ability to correctly predict how the market will move, or at a granular level, which projects and platforms will perform the best, can allow traders to achieve returns that are simply unheard of in other sectors. And with the discussions that the crypto market may be on the cusp of the next bull run, many speculators are now beginning to form their investment theses. And with that in mind, here's a look at how things might play out. So first of all, we have the 4-year cycle. Widely regarded as the coin that leads the market, Bitcoin has historically demonstrated a roughly 4-year price cycle, with its price action changing depending on its proximity to the halving date, which is an event that sees Bitcoin's block rewards and inflation rate cut in half every 4 years. As mentioned previously, Bitcoin has already been through 3 4-year cycles, having reached a new all-time high price between each halving event, and this cycle can be typically characterized by 4 smaller phases. So first of all, there's the accumulation phase. So during this phase, smart money begins to accumulate Bitcoin while its price is low. Bitcoin's price typically fluctuates within a narrow range while early movers build their positions, and trading volume typically remains low during the accumulation phase. And then there is the markup phase. So this phase is characterized by a sharp breakout from the accumulation phase as trading volume increases and demand for Bitcoin increases alongside growing adoption. This leads to a significant increase in the price of Bitcoin, with the price typically breaking its previous all-time high during this phase. And then there is the distribution phase. So this is the period where the early adopters start to take profits as the price continues to rise, and this leads to a decrease in trading volume and the price starts to plateau. Bitcoin can be described as trading horizontally during this phase. And then there is the panic phase. So this is the final phase where there is a market correction and the price of Bitcoin drops significantly. This often leads to a sustained bear market which can last for months or even years before the accumulation phase begins. And during this phase, most people are unable to stomach the drawdown and end up selling at a loss, further crashing the price. And indeed, if the cryptocurrency market is moving in the way that it did in previous cycles, then we are currently in either the latter stages of the accumulation phase or the early stages of the markup phase. And this would mean that many fundamentally strong crypto assets are at or close to their lowest prices, representing an attractive risk or reward ratio for speculators. And this may be at least true for Bitcoin. According to the Colin Talks Crypto Bitcoin Bull Run Index, or CBBI, an indicator that combines 9 metrics to see how likely the Bitcoin price is at the top or bottom, Bitcoin may now be undervalued with its current CBBI value at 16. And to put this into perspective, the last 3 times Bitcoin's CBBI sat at 16 on an uptrend, it was valued at $6,000 to $5,000 and $281 respectively. And then there is changing narrative. So every bull market brings with it a range of key themes and trends, and projects that fit within these trends often outperform the market average, while the first movers can sometimes go on to take the place among the largest and best known blockchain projects, which is the first mover advantage. The most recent bull market saw the meteoric rise of the play to earn niche, a sector that sees gaming DApp players rewarded in tokens for their in-game performance or achievements, and this gave rise to crypto gaming juggernauts like Axie Infinity, Illuvium, Mining Borealis, and Alien Worlds. It also spawned several derivative narratives like Move to Earn. The metaverse was also a prominent narrative of the last bull run, with established metaverses like the Sandbox and Decentraland seeing massive growth in terms of daily active users, and also market capitalization. It also saw a dramatic expansion of the metaverse landscape, with new players like Xana and Blocktopia throwing their hats into the mix. But most of all, 2019 to 2022 was characterized by the rapid adoption and expansion of decentralized finance, or DeFi. And this is a sector that has grown to encompass thousands of dApps and hundreds of different use cases. During this time, Ethereum saw the total value lock, or TVL, and DeFi protocols soar over $100 billion at its peak, while DeFi platforms like Uniswap, Compound, and Curve began to rival the activity of their centralized competitors. So let's talk about the current narratives. Like previous bull markets, the next bull cycle will likely be dominated by a handful of pervasive themes that determine which projects are built, adopted, and funded. Though the market is constantly changing and it's impossible to predict which narratives will dominate the next bull market, a handful of potential examples are currently forming, and some of which may go on to become key narratives in the next bull run. Some of those key narratives are, first of all, artificial intelligence, or AI, which is owed to the massive success of traditional AI products like GPT-3 and ChatGPT. The world's eyes have now been opened to the sheer potential of artificial intelligence. And in turn, there has been a major uptick in the development activity in the blockchain AI sector, while prominent blockchain AI projects have seen their native assets skyrocket in value amid growing demand. And indeed, some of the most popular AI projects have seen their native assets increase by over 500% in the last 3 months alone, including the likes of SingularityNet or AGIX, Artificial Liquid Intelligence or ALI, and AidPad. Advancement in technology is now enabling the development of the next generation of AI-embedded blockchain projects, some of which may go on to define the industry. And then there is ZK Layer 2s. During the bull market, popular Layer 1s like Ethereum, Bitcoin, and even BNB Chain were pushed to their technical limits as the number of active wallets skyrocketed alongside soaring DeFi activity. Layer 2 platforms can help to alleviate the load on Layer 1s by batching transactions together off-chain before submitting a validity proof to a Layer 1 to finalize the transactions. And this can help to dramatically scale the number of transactions the L1 can process while improving gas efficiency to the smart contracts and users. And the ZK Layer 2 narrative has been gaining momentum in 2023, and dozens of projects are now looking to deliver the benefits of Layer 2s to the masses. And then there is the Arbitrum ecosystem. So in February, Arbitrum recorded more on-chain transaction activity than the underlying Ethereum blockchain for the first time. Likewise, the total value locked in Arbitrum-based DeFi protocols and dApps now sits at almost $2 billion, making Arbitrum the fourth largest blockchain by TVL. Meanwhile, the number of active Arbitrum addresses has increased significantly in recent weeks, having more than doubled in the first 2 months of the year alone. In total, the number of active Arbitrum addresses is now up 1,000% in a year. So let's talk about the current situation. As you might be aware, the cryptocurrency market is currently expanding. In the first 2 months of 2023 alone, the total market capitalization of all cryptocurrencies grew from 795 billion to 1 trillion, with the average cryptocurrency recording a gain of 35% in this time. And year to date, Bitcoin has increased by around 40%, outperforming the market average by a significant degree. And this is common during the accumulation phase of the market cycle, with Bitcoin typically leading the market, while fundamentally strong altcoins clock in impressive returns. And as a result, Bitcoin's market dominance has slightly increased, up from 40% to around 42% since the start of the year. In a full-fledged bull market, it isn't unusual for Bitcoin's dominance to top at around 70% at its peak or fall to under 40% at times. And Bitcoin's dominance usually increases in the early stages of a bear market as money drains from altcoins to Bitcoin. And as the market shifts gear and moves into a bull market, money then tends to trickle from large caps to mid caps, and then finally to small and micro cap coins. This results in a gradual reduction in Bitcoin's dominance. And because of this, the end of the bull market is often coupled with a dramatic rally for altcoin, which serves as the last hurrah before the market enters a bear trend. Moreover, the number of Bitcoin withdrawn from exchanges or outflows typically decreases when major market players enter accumulation mode. Increased withdrawals can actually indicate that the market is turning bullish, since holders appear less willing to trade their Bitcoin. And then there is project funding. So in the last 2017 bull market, the vast majority of new projects conducted an initial coin offering or ICO, allowing individual and non-professional investors to buy tokens at the best available price before they list on public exchanges. And many of today's largest projects have conducted an ICO in 2017, including Filecoin and Polkadot. In the 2020 to 2021 bull market, the main public sale fundraising route actually shifted, and most projects instead held either an initial exchange offering IEO or initial DEX offering IDO, where projects were able to crowdfund from centralized exchanges or decentralized exchange users respectively. And these projects could then directly list their token on the associated exchange platform, simplifying the process for projects and participants. IDO and IEO raises tend to be significantly lower than the average for ICOs in 2017, but the total number of projects raising funds was dramatically higher. For comparison, there were around 966 ICOs held in 2017 compared to several thousands since IDOs in 2020. During the last cycle, standalone launchpads like DAO Maker and BSC Pad rose to prominence, helping users access some of the most profitable projects of the time. According to recent data, crypto fundraising has actually increased month on month since December of 2022, but the total amount being raised is still at its lowest point since December of 2020. Nonetheless, this is the first time since August of 2021 that fundraising has increased for 3 consecutive months, and this indicates that funds are beginning to cautiously ramp up in investments. So when do you think the next bull cycle will start? Let us know in the comments down below.